Okay, right now we're going to see the power of risk management. So there we go, one losing trade. Right now we have a winning trade. Actually, I think it's kind of fast. We can just make it a bit slower. So partial taken at this high, lowest hanging fruit. Let's see if we get our take profit. So as long as this VC is not being filled fully, okay, chances are it's going to just spike up, and my take profit don't need to be right also. Right now, stop reserve would be better than break even. Secure 5 points. So this is a pre-market trade, 750 macro. Yeah, just outlining the framework. Basically, it took the 730 low, so just look for 7 to 730 high, which is 708 high. So like I say, right, as long as this BC is not fully filled, we can expect higher prices. Okay, now that we dug deeper in here and it closed inside of this BC, okay, I really want to see a swing low here, then it trades higher very explosively, because then that will confirm that this is a stop rate just to continue higher. And right now, that this is exactly what I'm talking about. And it's just actually it was just retracing to a 5 minute BC. So this whole thing is a 5 minute BC. So it's just a turtle soup entry. Now all this, then there we go. 750 macro. First took out sell side, then go for buy side. Yep. That's basically what the algorithm do every fucking day. No, that's why it's never too hard to look for setups. And also in lately, actually quite some time, I realized that trading in all this environment, actually the algorithm is going to do what it do. But if it aligns with a higher time frame bias narrative, then when the time is right, everything is right, then it might pan out. So for instance, like if today I have a bullish bias and it took out sell side first during 7:30, like 7 to 7:30, it took out the sell side first, then it goes for buy side. Then that would really align with the bullish bias. But let's say if you're bullish, but the narrative just says, okay, you want to go down to this level first. So what they would usually do is they'll take out the buys up first. So if you're bullish, will you go long once you take out buy side? No, definitely not. Because we want to only go long in the discount, and we only want to sell short the premium. So okay, that is manipulation. Yeah, no doubt I was holding a short. Let's just look at it one more time. Okay, this is heavily manipulated. Okay, why am I shorting based on first of this buy side taken? Then we have Tuesday previous high, and then we have this emergent failure gap after a stop break inside this breaker. So this wouldn't consider it a gauntlet, but it can be a gauntlet. But basically, to me, every time after a stop break, the first BC or CB is a good high probability inversion fair value gap. So just using it as a inversion fair value gap premium, shorting in a premium, and then it just rips. But basically, we can see like the bodies are all staying below that inversion fair value gap midpoint. So this is wasn't expecting this, but if your onside is good, if your offside, oh my god, your stop loss. Well, if lucky for me, if I do live fund also, it's just one contract. So 55 points, one contract is just 110. It's not very big enough to deal some damage. It will deal a little damage, but it's not really that much of a problem to me. And then slowly we was looking. We were looking for that London low, and this is another London low, and yep, basically got tagged. So everything I outlined was tagged. Took out buy side first, then took out sell side, which is what I was talking about narrative. So how the market wants to do something. So if let's say it was a bullish day and this whole thing happened, sell side, then you can start expecting like during the lunch macro or doing 9:30 or silver bullet to have the actual move, because all this is already Judas swing already take out all the sell stops here. Smart money already accumulated here. So this is actually a sell model, this original consolidation, first stage accumulation, second stage accumulation, then distribution. Then at this side, is just a distribution, just a no, just a accumulation stage for the buy model. So basically, took out a high time frame buy side, previous days, PM session buy side, then go down, accumulate. So whether it distributes or not, you go back to a premium. So if you buy here, you go long. You just want to take TP here, without being right. Okay, removing the need to be right. So yeah, that's how I would trade this day.